Hello, welcome to this daily market snapshot from myself, Jasper Lawler, the senior market analyst here at LCG. There's still a lot of politics happening today, not so much on the economics front. Probably the biggest economic report today, in the light of recent market moves, is the Department of Energy US oil inventories data coming out later today. So we want to just have a quick look at the oil chart. We'll do that. We'll have a look at the Brent crude chart in just a second. But the oil price has fallen substantially in the last couple of days. Now, there's a few different factors here, as always. But in the short term, really what's been driving this is sentiment. Data from Friday from the CFTC said that bullish positions in the oil market, specifically for US oil, is the most bullish on record. So obviously the market really positioned for stronger moves higher here. And what happened is it got a little ahead of itself and the market's dropped back quite severely over the last couple of days. Now the price is still within its trading range. So the question we want to answer here is, will it stay so or will it break one way or the other? So I'm just going to have a quick look at this Brent chart now. So I'm zoomed in on a short-term frame chart. I'm going to pull out to give us a bit of a weekly perspective here. So you can see that from a weekly candle perspective, we've been in a very tight range, really since this big move here when OPEC announced their deal. That's why the positioning has been so strong, positioning for higher prices in oil, because OPEC have agreed to cut output. But obviously, there's some concern that maybe they wouldn't cut as much as they promised, and also that other areas of the market, US shale or the big oil companies, will come back and make up the deficit. So prices have been sideways. But the moving averages on the longer time frame are supportive of higher prices. Dropping down to a daily candle chart, again you can see that the moving averages are aligned nicely. The shorter term 20 above the 50, although the price has just dropped down below the 50-day moving average. It has found support at this rising trend line here, which has already been confirmed with 3 previous touches. And if you drop down to the smaller time frame here, the 4-hour chart, you can see that this trend line has been respected almost perfectly. We've got a little short-term bounce here, but the trend has been sharply lower in the short time frame. You can see supports easily breaking here with very minimal rebound. So what we're looking for, the potential here, is a pattern to emerge to show us there's been some short-term reversal in sentiment and to say that this sharp reduction can rebound to the top side. And where this support broke, that would be a strong possibility as resistance from the top side. That's around the sort of 55.70 mark, just below there being the 55 round number. That's kind of where we're dealing with at the moment. Should this trend line give way, then this longer term area of support is probably going to come into play. First founded from this peak back in October 2016, it's kind of been the support for this range. Prices could dip down to there again, should this trend line give way. So that's it for the snapshot for today. We're obviously looking at oil prices. Perhaps the game changer here on whether this trend line holds will be today's oil inventories data. So we'll be watching that. Good luck with trading.